Well, we've just passed the budget, so the obvious question to all of you will be your initial impressions of Union Budget 2022. Dhiren, we'll start with you.
Yep. There wasn't much for investors to actually take note of. The only notable thing was that we are doing okay. It was almost like an update that we are doing okay. I think one thing which happened, which is quite significant for speculators, and most investors will get distracted by that, which was, the taxation laws pertaining to digital uh, assets. And that is something which investors should be wary of, because it gives a sense of, this is a very volatile asset which has come into being in the last 1 2 years. I have not been able to understand what drives it. And my understanding historically has been that keep away from something which you don't figure out. So, but many investors will get attracted by the wildness of and look at it as an opportunity. And the budget gives a sense of legitimacy to the whole framework. So be wary of that. Ask your basic question. You don't get into it if you don't understand that.
All right. Well, this was a budget which was proposed to bring in stability and predictability. But considering the times of easy money are going off, let's see how much stability and predictability we can bring. Considering January 2022 hasn't exactly been a calm and steady period for the markets. Meanwhile, let's move on to the table around the table and hear their views on the budget. Amit, your thoughts on this on budget 2022?
I think the government actually gave you a roundup of what they intend to do over the next 10, 20, 25 years. And a sound budgeting exercise is actually key success to your financial plan. So, as a country, they have put down the roadmap as to what we have to see in the next 10, 15, 20 years for India. As Dhirendra mentioned, we started with not accepting digital currency. Then we came to putting up a committee. Then we came to putting regulation around it. Now we have said that we'll launch digital rupee. So I think the government is also accepting new ideas and new technologies. And Gautam, the important part is that this new age technology companies or the ideas what we have to pay a lot more attention, because I know we know Mumbai today now as Kamla Mills compound or Peninsula compound, but all those were textile companies once upon a time which were listed, and today they are not there. We have seen leasing finance companies like Siet and others which are not there today, and we have new age companies. So the government also has realized this, and they are forward looking. I feel so that what will upset the apple cart is clearly if interest rates move up too quick, uh, and along with that, if we don't have growth, that is one road bump which I see, which investors should watch out for. That's my take on it, Gautam.
Absolutely. And it's always that growth versus inflation fight. And of course, looking at where the fiscal deficit figures are, it will be interesting to see how the government manages to bring things under control. Harit, meanwhile, your initial impressions of Union Budget 2022.
Good morning, Gautam, and thank you for having me on the panel. A quick disclosure, the views I'm sharing are personal and in my personal capacity. That said, I think for me, the biggest takeaway was that fortunately we didn't go overboard on any of the populist measures, given that, we are heading for elections in some of the states, which are some of high stakes for some of the parties. I think that's a big relief for me. Having said that, I would have personally, we've gone incremental. The government is trying to do a lot of things, but those are kind of incremental steps. Given that we've got an absolute majority in the parliament, I would have really liked to see a paradigm shift. Three critical areas where I personally would like to have seen some initiatives in the budget. First is defense. Uh, our allocation as a country to our defense as a percentage of the GDP, given the kind of constraints we have on our neighborhood, is way low. And we all want a very well-doing country, but that comes in a state where you have safety and security at your borders. So capabilities can't be created overnight. It takes vision to do that, and I would have really liked to see that. And there's a spin-off to that. It would have helped you both in terms of security, but also increasing your production capacities, R&D capacities, which have a spin-off effect on jobs and forex investment. The second critical area where I think we really need huge investments is health. Like you rightly said, last year was an eye opener, and it's clear that our health system is not able to cope up with the kind of things that are happening. And there's no saying that COVID is gone or there won't be anything else like this. So we really, really need to rethink on a national health policy, which will again have huge spin-offs both in the job creation space and the capex space. And third would be on the whole concept of job creation. I think our biggest challenge as a country today is a vast population. It's a demographic dividend, of course, to have a young population, but then we also need jobs for them. We focused a lot on, let's say, infrastructure. We do need good roads. We do need lots of bridges. But there, if you see, majority of the labor force is in the unskilled arena. Now, if you, let's say, move to something like shipbuilding, where you need a huge initial push from the government, but then you can upskill your labor force and move them from the unskilled to the semi-skilled or more skilled area, that then one increases your per capita income, which will help you with, higher consumption going forward. So it's a very virtuous cycle which will help the economy, but that then needs that vision to come through in the budget.
All right, three very important points indeed for the government to look at: development of the defense sector, and of course, development of the healthcare infrastructure, which has been, a priority area for a long time, but still needs a lot of development. And the demographic dividend, which you mentioned, that's going to be key, especially as a huge amount of young population needs jobs, and we need to make sure that those options are available as we recover from pandemic-induced boost. Point taken, Harit. Bhupesh, we'll come to you on your thoughts for Union Budget 2022.
Right. So I think it's a good attempt to focus on long-term growth. Given the fact that we had elections also, there was some fear that it may turn out to be a populist budget. But instead, government chose to focus on capex and on capacity building. Over the last 3 years, this is what government has been doing, and what we see is that the total capex outlay by government of India has doubled in 3 years. This is perhaps one of the first times I would say that capex has seen such sharp jumps year after year. That's one very good thing, because while globally when we had this pandemic, a lot of economies came out with big stimuluses, and most of these stimuluses were demand side in nature. And the flip side we are seeing around the world in terms of high inflation. But now this government has been focusing on the reverse side, on the supply side on the thing, that we build more capacity, more roads, and that will crowd in overall investment, and that will create jobs, and that will create demand. So the different way to steer the economy out of the pandemic. I think it's a good way. Arguably India is still deficit in terms of investment, in terms of infrastructure, and these things are a little risky. And globally, and we have seen a big example in China, it's the government which has to drive all these investment where returns are risky and doesn't come quickly. And I think it's a very, very good attempt in that direction. Having said that, we all have a lot of expectations from budget, but in economics, we have this fundamental equation that expenditure is equal to either your tax revenues or your borrowing. So there are no free lunches. So either you tax people more or you borrow more. That will result in increasing of interest rates, and that will have an impact on other segment of the economy. It can result in more inflation. So there's a tightrope walk which governments have to do. And within the constraint, I think they have done a pretty decent job. The numbers are very credible. The tax numbers are very credible. The focus on capex, I just mentioned, is quite good. And they have again, tried to consolidate from a very high level of fiscal deficit from 6.9% last year. Now they are targeting 6.4%. Market expectation was between 6.6 to 6.4, and that I think it's a pretty okay number given where we are in the economy. Some people are complaining that there have been lesser outlays in terms of revenue expenditure, social sector schemes like health and education, like health in particular, and also rural development. But the fact is that last 2 years, because of COVID, government had to substantially increase its allocation for vaccination, for free grains, for increased NREGA allocation. Now, because hopefully, if the worst of pandemic is behind us, we are normalizing to the pre-COVID trend in terms of that breakup of government expenditure. And we should always remember that fundamental equation that expenditure has to be matching with either the taxes or the borrowing, and both of them are not a very good option. So within the constraint, I think it's a pretty decent budget.
An investor education and awareness initiative of Aditya Birla Sun Life Mutual Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.